Welcome to Charged Alpha. I'm Hudson, joined by Lana. Today's chapter, Advanced Micro Devices, the semiconductor company that came back from near extinction to become one of the most important chip designers on Earth.
AMD was founded in 1969 by Jerry Sanders and colleagues who left Fairchild Semiconductor. For decades, it was Intel's scrappy understudy, second-source supplier, lower price, always chasing.
The x86 license from 1982 gave AMD the legal right to build processors compatible with Intel's architecture. That agreement shaped the CPU industry for 4 decades and is still the foundation AMD competes on today.
The 2006 acquisition of ATI Technologies brought Radeon GPU technology into the fold, adding graphics capability that would later become AMD's entry point into AI acceleration.
By 2014, AMD was in serious trouble. Revenue was falling, market share was eroding, and the stock sat near $2. That's when Lisa Su took over as CEO.
Su holds a doctorate in electrical engineering from MIT and spent years at IBM and Freescale before joining AMD. Her first priority was rebuilding the chip architecture from the ground up.
The Zen architecture launched in 2017 and reset AMD's competitive position overnight. Ryzen processors challenged Intel in consumer PCs, and EPYC server chips began taking data center market share.
The 2022 acquisition of Z-Links for $49 billion added field programmable gate arrays and adaptive computing, expanding AMD well beyond CPUs and GPUs into communications, automotive, and embedded markets.
AMD's revenue splits across 4 segments: data center, client, gaming, and embedded. Data center accounts for roughly half of total revenue and is the primary growth driver.
The MI300X AI accelerator, launched in 2023, is AMD's direct answer to NVIDIA's H100. It targets hyperscalers seeking supply diversity and an alternative to NVIDIA's CUDA ecosystem.
Gross margin runs around 53% adjusted. Because AMD is fabless, outsourcing manufacturing to TSMC, it avoids the tens of billions in capital expenditure that integrated manufacturers carry.
EPYC server processors are qualified at all major cloud providers. Once a cloud provider certifies EPYC, migrating away requires significant revalidation work, a durable retention advantage.
AMD powers both the PlayStation 5 and Xbox Series X with custom APUs, a combined CPU and GPU design. That dual console win demonstrates AMD's ability to compete on performance per watt at the system level.
On the software side, ROCm, AMD's open-source compute platform, is closing the capability gap with NVIDIA's CUDA. ROCm compatibility with major AI frameworks is central to MI300X adoption.
Lisa Su has led AMD for over a decade, one of the most celebrated turnarounds in semiconductor histories. She chairs MIT's Engineering Advisory Council and has been recognized by Fortune and Time for her leadership.
AMD competes in a genuinely contested landscape. NVIDIA's software moat in AI remains formidable. Intel is restructuring aggressively, and TSMC supply constraints affect AMD and its rivals simultaneously.
That's the AMD company chapter, from near bankruptcy in 2014 to a chip powerhouse competing for AI supremacy. The architecture transformation is complete. The market share battle is ongoing.
EPYC, MI300X, Zen, Xilinx, AMD built something genuinely formidable. Let's get into the numbers.
AMD just made a statement with Q1 2026 earnings. Revenue came in at $10.25 billion, up 38% year over year. The data center segment alone grew 57% to $5.76 billion. Non-GAAP EPS of $1.37 beat the street by 6%. Management guided Q2 to $11.2 billion. The AI chip race is not theoretical. It is showing up in AMD's numbers. This is Charged Alpha. I'm Hudson.
And I'm Lana. AMD is a fabless semiconductor designer. No factories of its own, manufacturing outsourced to TSMC on leading-edge 3 and 5 nanometer nodes. The company competes across 4 segments: data center, which now accounts for roughly half of total revenue; client, which covers Ryzen consumer and commercial CPUs; gaming; and embedded, which includes the Xilinx FPGA portfolio acquired in 2022.
AMD's data center segment is driven by 2 engines. First, EPYC server CPUs that have taken meaningful share from Intel at every major cloud provider. Second, the MI300X AI accelerator, AMD's direct rival to NVIDIA's H100 and B200 GPU series, targeting hyperscalers that want supply diversity. The company's market cap is approximately $680 billion, with the stock around $420 a share.
The Q1 2026 headline total revenue of $10.253 billion. The street was expecting $9.91 billion. That is a 3.4% revenue beat. Year over year, the growth rate is 37.8%. For a company already running at 25 plus billion in annual revenue, that acceleration rate is exceptional in the semiconductor industry.
On earnings per share, non-GAAP EPS came in at 137 versus the consensus estimate of 129. That is a 6.2% EPS beat. GAAP EPS was 69 cents, lower due to stock-based compensation and acquisition-related charges from the Xilinx deal. The non-GAAP figure is the clean operational read, and it showed healthy improvement from 107 in Q1 2025.
Data center is the story inside the story. Segment revenue was $5.76 billion, up 57% year over year. EPYC server CPUs drove the CPU side, and the MI300X AI accelerator is now a meaningful revenue contributor with multiple hyperscalers in production deployments. Microsoft and Meta have publicly disclosed MI300X usage. This is what AMD has been building towards since the Zen reset.
The other three segments posted mixed results. Client grew 23% year over year as Ryzen laptop and desktop demand recovered. Gaming declined as expected. The console custom chip revenue cycle is in a down phase following the PS5 and Xbox Series X ramp. Embedded showed early signs of inventory correction recovery. Combined, the three non-data center segments contributed approximately $4.5 billion.
Free cash flow for the quarter was $2.57 billion. AMD ended Q1 with $5.6 billion in cash and short-term investments against $3.9 billion in long-term debt, a net cash positive balance sheet. Non-GAAP gross margin was 53.3%, up from 50% in the year-ago quarter. The financial profile is the strongest AMD has ever printed.
The forward guide is what moved the stock after hours. AMD guided Q2 2026 revenue to approximately $11.2 billion. The street was expecting closer to $10.8 billion. At the run rate implied by Q2 guidance, AMD is tracking toward a $45 billion revenue year. Data center is not slowing. It is accelerating into the back half of 2026.
The analyst community has a strong consensus buy on AMD. With the stock around $420, the average sell-side price target lands near $460. Modest upside priced in by the median analyst before this print. After a beat of this magnitude, expect a wave of target upgrades over the next 2 to 3 weeks as models get refreshed.
The bull case from the street centers on MI300X revenue ramp velocity. Analysts at several major banks have modeled the MI300X contributing between $4 and $8 billion in revenue for full year 2026. If AMD executes on that trajectory, the current valuation looks reasonable. The software story also matters. ROCm adoption at major AI labs is the key leading indicator to watch alongside shipment volumes.
The skeptics on the street focus on NVIDIA's software moat. CUDA has a decade of developer tooling, libraries, and frameworks built around it. ROCm is improving, but analysts tracking developer mindshare say NVIDIA's ecosystem lead is still measured in years. A chip that is 90% as capable but requires workflow migration will not automatically capture market share at AMD's implied pace.
There is also the export control overhang. U.S. restrictions on advanced AI chip exports to China have directly capped AMD's addressable market. The MI300X is subject to the same export limitations hitting NVIDIA. AMD has not broken out a precise revenue figure for the restricted China exposure, but analysts estimate it as a meaningful headwind to the 2026 total addressable market.
One consistent theme from post-earnings analyst notes: guidance credibility. Lisa Su's track record of setting conservative targets and then beating them has earned AMD a credibility premium. When AMD guides Q2 to $11.2 billion, analysts largely treat that as a floor. That reputation, built over a decade of consistent execution, is a meaningful part of what this valuation reflects.
The bull case for AMD is anchored in the secular AI infrastructure build-out. Hyperscalers are committing hundreds of billions in data center capex through 2027 and beyond. AMD, as the only credible alternative to NVIDIA at scale, is uniquely positioned to capture supply diversity demand. Even capturing 15 to 20% of the AI accelerator TAM represents a business-transforming revenue stream.
The EPYC CPU moat compounds the bull case. Data center customers who have migrated workloads to EPYC face significant revalidation costs to switch away. AMD is not fighting for the socket at each renewal cycle the way it did in the pre-Zen era. That stickiness creates durable data center CPU revenue, even if the GPU competition remains fierce.
The fabless model is a structural advantage. AMD accesses TSMC's 3nm and 5nm nodes without carrying the $40+ billion capital burden that Intel's integrated manufacturing model requires. When TSMC advances its process nodes, AMD benefits automatically. Better performance per watt each generation without proportional capital expenditure is a durable competitive lever.
The bear case starts with NVIDIA's software moat, CUDA. Tens of thousands of AI researchers have built their workflows on CUDA. The tooling, libraries, and benchmarks are all tuned for NVIDIA hardware. ROCm is improving, but the switching cost for an organization with years of CUDA investment is genuinely high. That moat does not disappear because AMD's hardware is now competitive.
Export controls are a concrete, quantifiable risk. U.S. government restrictions on selling advanced AI chips to China directly cap AMD's addressable market. AMD has created lower capability chip variants to navigate the regulations, but the rules can tighten further at any point. Any escalation in U.S.-China technology competition hits AMD's China revenue without warning and with limited management ability to offset.
TSM supply concentration is a third risk. AMD outsources all manufacturing to TSMC, the only foundry capable of producing leading-edge 3 and 5 nanometer chips at volume. Any disruption to TSMC, geopolitical, natural, or capacity-driven, hits AMD immediately. AMD and NVIDIA are both competing for TSMC's most advanced process capacity, and TSMC sets the allocation.
Hyperscaler concentration rounds out the bear case. Microsoft, Google, Amazon, and Meta account for a disproportionate share of AMD's data center revenue. If anyone reduces orders or shifts toward custom silicon, AMD's revenue trajectory changes quickly. The custom ASIC threat from Google's TPUs and AWS's Trainium is real and intensifying.
Let's put AMD in competitive context. NVIDIA is the undisputed AI GPU leader. H100 and B100 chips have a massive installed base across enterprise and hyperscaler customers. NVIDIA's non-GAAP gross margin runs above 78%, well above AMD's 53%. Revenue growth at NVIDIA is also faster. AMD is gaining share, but it remains the challenger in AI accelerators.
Intel is AMD's oldest competitive relationship. In server CPUs, EPYC has taken significant share. Intel's data center revenue has been under sustained pressure. Intel is restructuring aggressively under CEO Lip-Bu Tan. An Intel recovery would pressure AMD's CPU share gains, though Intel has been promising that recovery for years without consistent execution.
Qualcomm is a more distant peer. Qualcomm dominates mobile CPUs and is expanding into data center and PC ARM-based processors. But Qualcomm's core business is smartphone chips, and the overlap with AMD is limited to the emerging PC AI segment. The most relevant comparison for AMD's AI GPU story is exclusively NVIDIA. That is the contest that determines the valuation.
On valuation, AMD trades at roughly 45 to 50 times forward earnings, a significant premium to Intel's single-digit multiple, and a moderate discount to NVIDIA. That gap reflects AMD's growth trajectory. The market is paying for a company gaining share in two of the most important chip markets simultaneously: data center CPUs and AI GPU accelerators.
The options market heading into AMD earnings leaned modestly bullish. The put-call ratio on open interest was below 1, indicating more calls than puts outstanding. The implied volatility term structure showed elevated near-term IV relative to longer-dated contracts, consistent with an earnings event where the market is pricing in a meaningful move in either direction before options sellers can reset.
The call flow concentrated around the data center catalyst. Traders positioned for MI300X revenue upside in the print. When options flow aligns with a specific fundamental thesis rather than broad market speculation, it can signal institutional directional conviction. Elevated AMD call volume in the week ahead of earnings was notable relative to the prior trailing average.
On the insider side, there has been limited open market purchase activity from AMD executives. Standard option exercises and RSU vesting account for most recent Form 4 filings. Compensation-driven, not conviction-driven. Lisa Su carries substantial equity alignment through long tenure grants. The absence of discretionary open market buying at current levels is worth noting, though not alarming given her existing equity exposure.
The combined read from options and insider activity is neutral to modestly bullish. Options flow leaned toward upside before the print, and that call was correct. Insiders are not actively buying on the open market, but AMD's executive team has deep equity alignment through existing grants. When the fundamental numbers are this strong, options and insider signals are secondary confirmation rather than primary thesis drivers.
AMD delivered on every key metric this quarter. Revenue beat, EPS beat, data center up 57%, Q2 guidance raised. The MI300X ramp is real, EPYC is holding share, the balance sheet is net cash positive.
The risks are real: CUDA moat, export controls, TSMC concentration, hyperscaler dependency. But AMD is now competing from a position of strength it did not have 5 years ago. The AI infrastructure build is its structural tailwind.
Financial data and charts sourced from Financial Modeling Prep. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.